All right, let's see what we see. This is always about getting new information and what do you do with the new information and how soon and quick did you get it? I talk about all the time. The value and the edge of information is often at what point did you get it? Where were you in the line? You at the back of the line getting this information, or are you at the front of the line getting this information? If it's something that the President of the United States does, the Treasury Secretary, a comment, a press release, earnings, a rumor, whatever, or order flow. What changes the bias of price? Bullish, bearish. You could see this if you guys are looking at this chart here. You'd see it's downtrending. I mean, it doesn't take a rocket scientist to see that it's bearish, right? That's fine. I was bearish in here. And as if it gets below these the bottom of this range, it could go to the next train station, which in this particular session was the overnight low and yesterday's low, which are around the same price, about 15 handles below, which is doable, but they never got below there. Something interesting happened though that got you to scratch your head if you were bearish or get ready to execute if you're bullish. Now, remember, you most almost already had to have a step one. Let's say you're bottom feeding and you don't think it's going to break and you're bullish. You're looking for something to get you long. You're going to play it from the long side. Or you're bearish. You do think it's going to go to yesterday's low and the overnight low, but you're looking to qualify a short. You're going to play from the short side. You don't really see anything to qualify. In fact, you're seeing shorts come in. If you're looking to get short, you do not want other people short with you. And our laser is green, green, green all in here and then goes red, red, red for a few bars. So that's just like, just hold your horses as far as trying to get short. Just take your time. There's no reason to jump in. So we play it, and you could see it just stumbling sideways. You could see these shorts on the profile sneaking in. You could see the white here in the chaser ballooning out, and you're kind of getting, we talked about in previous highlight videos, kind of a choppy forehead or receding hairline, some bald spots on the offer side. Let me pause it again. You see that the gray side is that, and the white side was ballooned out. And that was before here. It was started happening down in here. Let's bring it back. So you're already red laser, which is a little bullish. And then you get a blue triangle. But by the time you get the blue triangle, boom, it had rallied 4 or 5 ticks right there. So you would have had to reach and be aggressive if you were looking to get long. That's not necessarily, hey, what's the matter with you? You should be long already. No, but for certain, you shouldn't have been short, which is important because this would have been nothing but heat and nothing but a bad spot if you were short in this area. But if you look at, let's just look at this chaser again. And I rewound it and I started it. All right, take a look. It's pretty balanced right there, although it's 429 to 319. So it's slightly buyers over, but you could see it go balanced right there. All right. And then right there it goes 2 to 1. Before it rallies, it's like 2 to 1, 471, 254. So before it rallies, it shows you that buyers are getting a little bit more interested and sellers are starting to pull back and pull. Now it comes balanced to imbalance again. So every time it comes, I paused it, every time it becomes balanced, it quickly goes imbalance. Buyers step in and you get that patchy, kind of like for you golfers out there at a driving range, you know, the mat on the driving range, it's got all the different patches from all the people swinging, right? That's what it kind of looks like on this right up in here on the gray side of the chaser. And so then you get the blue triangle, which you also could read that as soon as you get a blue triangle, which is 550, it's a big one, price reacts to it. It's like, all right, it's not like blue triangle and it was hanging around. You get a blue triangle and it reacted up quickly. And then you also get the gray to stay choppy, meaning the sellers are kind of abating and we walk up. Then what happens? Watch what happens. You fill out the gray, and that becomes the top of this little rally. In order to be good at predicting 10 handles, you got to be good at predicting 2 handles. Let me back it up again. So you're rallying pretty quickly. If you just look at the chart and just this, it shows you a lot many more buyers than sellers, and we go up. But just watch it. The first moment you see the gray kind of um, replenish, reset, fill in, whatever, that probably is going to be the top, not the top for the day of the move. You don't have it yet. 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 Right there. Start getting it there, right? That should be the moment where you say, could be a temporary top of the move, remember. Then when you're right, you don't feel like it's a good guess. And then you could take this thing and show where does it go down to? Just like price always, and I should always does, but what markets do goes back to the scene of the crime. This was kind of a crime in here. Boom, where it shot up. Why is it a crime? Because there are a lot of people in here who are short, are pissed off at this moment because it went up quick. Then there are a lot of people who wanted to get long but didn't, are pissed off because it would have been an immediate winner, right? So when you get this moment right here where it shoots up quickly, always remember you've got pissed off people. Those that are short, that are pissed off that it's run away from them and their losses are adding up, and then pissed off longs who aren't long. I should say they're bullish, but they're not long. They're pissed off they didn't get long. So the reason why when you see that, it often works in this case as subsequent support is because the people who missed getting long or covering their short right here, they're trying to do it the next time it gets to that area. The people who wanted to get long but didn't are trying to get long now there. The people who wish they'd have covered their short are trying to buy it there to cover their short there. That's where the pain started. And that's why it doesn't go all the way down and through and let them off the hook. And it kind of like a teacup support and then rallies out of the hole. It teases that spot. That's how you read a chart and understanding inflection moments, but what it means. Just because you missed it doesn't mean that the opportunity is over with. Just think about that a second. As long as you now start looking at a chart and saying, where are people pissed off? Are people pissed off both on the long and the wannabe, or I should say, on the short and the wannabe long side? That's support. Why is that support? People who are pissed off that are long. Where's my pen at here? I can't get my pen. Oh, I'm clicking on the wrong thing. I'm clicking on the recording pen. All right. So that's who you're listening to, a guy that's clicking on the image of Zoom and pen. So here for laughing at me. Anyhow, the people who are pissed, that's what reading a chart means. Where are people angry at? And if they're angry because they're short and taking heat, what are they? They are buyers. Just like when you're short, you're a buyer to cover. We know that. They're pissed off shorts. I call them PS. And then we get wannabe longs, WL. What are wannabe longs? Those are people that wish they were long at that moment because that was the moment it rallied and they would have had an immediate head start and an immediate winner. Wannabe longs are what? They're buyers too. They want to be buyers. They wish they were buyers, right? Because they would have bought it and they would have been long. So they wouldn't be wannabe longs, they'd be long. But now they're wannabe longs, so now they're buyers. So I don't know about you, but when you have buyers plus buyers in an area, now we're talking about future support. That's all we're talking about. When we're talking about an area that might have buyers and buyers, that's what you need for support to be support. You need people who want to buy it for support to be support hanging out down there. That's why support's support. And it's generally people who want to get out of a bad position, which is in this case a short position, and people who want to get in to a what they consider is a winning position, and they're wannabe longs. Wannabe longs are buyers, and if you know an area that there's wannabe longs, there's probably support there. Wannabe longs and pissed off shorts. Think about that going into the weekend. That's why you got support after the jump. You call it the crime scene. And so you could have been bearish in this area here. That would have been fine. But you needed to scratch your head and not qualify as short. That's why it's going to become easier and easier to be wrong because you know what to do when you're wrong. And sometimes you don't have to act on something that you would have been wrong about. That'll make it easier to take a shot. It'll make it easier to be wrong and be okay with it. Insecure people are not good with being wrong. They're not going to make good traders. All right. People with low self esteem or insecure, the reason why they're not going to be good traders is because they never admit that they're wrong. They don't want to be wrong. Right. They feel bad when they're wrong. They're insecure. No, we're building and have built a community of people who are okay with being wrong. Price will tell us it's no big deal. All right. It's no big deal. In 40 or 50 years, it really won't be a big deal for anybody in here, anyways. You got to think about knowing what you're going to do after you're wrong. And if you're good at knowing what you're going to do after you're wrong, you're going to be confident with taking those shots. And then you're not going to be worried about being wrong. And you're going to backfill that insecurity. So if you take a look at this again, you've seen moments to qualify potential support with a blue triangle and a breach of a pink. You're going to see as we just skim through this, a blue triangle that actually gets priced to go up. Another example of where it got fast. Draw a line across. You could see that held as rotational support. You're seeing blues not get breached, but pink's getting breached. You're seeing when it goes green to red, tends to go up. Where did it go green to red, Anthony? Right in here. Where did it re-rally out of the hole? Right in here. Now, if I would have told you that without showing you why, you'd like me more. Take a look at this. The laser is green. The laser is red. Just look at it right here. We also mark it there. Let's go back and show you this. The laser is green. The laser is red. The laser was green. The laser is red. The laser was green. The laser is red. Fast forward it. The price goes up. It's not a magic. Well, it is kind of magic because it's good, but it's not the input for it's not magical. If you're accurately assuming the number of longs and shorts in the market and a strong sample size of it, and then you compare them to each other, you find if the market is too short or too long. Because if you're bullish, you want the market to be short. If you're bearish, you want the market to be long.